Hello, and welcome to AI Market News by LM. All right, let's jump right in. The Japanese yen is at a serious breaking point. It's creeping ever closer to a number that has traders and frankly entire governments on high alert, 160 against the US dollar. So what's the big deal about this specific number? Well, in this explainer, we're going to break down what this currency crisis really means for Japan and the kind of shockwaves it could send through the entire global economy.
So as of this morning, US time, this is where we're at. The dollar-yen exchange rate is hovering just right there, inches away from that massive psychological barrier. To put this in perspective, just a couple of years ago, we were looking at a rate closer to 120. So yeah, this relentless slide has put absolutely everyone on edge, from Tokyo all the way to New York.
So why all the intense focus on 160? Look, this isn't just some random number pulled out of thin air. For Japanese officials, it is the line in the sand. If we cross it, it suggests the yen's weakness has become way too damaging to just let it slide. This dramatically increases the odds that the government will actually step in and start buying up yen. And believe me, that kind of intervention would send immediate shockwaves through the whole financial system.
Okay, first, let's really zoom in and get a handle on just how precarious this situation has become for the yen itself.
This quote from a former Bank of Japan board member, it just perfectly sums up the mood in Tokyo. A rate of 130, that was considered pretty reasonable. But pushing up against 160 is seen as just, well, too much. It's actively hurting the purchasing power of Japanese consumers and businesses.
And you can bet the official warnings are escalating. Japan's finance minister has flat out said they're prepared to take bold action against speculation. Now, this is classic central bank speak. It's a verbal warning shot, right? It's designed to make traders think twice before they keep betting against the yen.
But here's the thing. This isn't just about Japan's internal policies. Oh, no. The yen's weakness is getting supercharged by some incredibly powerful global forces.
A huge driver here is geopolitics. The ongoing conflict with Iran has effectively shut down the Strait of Hormuz, which is a critical choke point for global oil shipments. I mean, this tension alone is enough to send energy prices through the roof. Now, for a country like Japan that has to import almost all of its energy, this is an absolute perfect storm. We've got crude oil prices surging, and at the exact same time, the US dollar is getting stronger. So what does that mean? It means Japan has to pay more for its energy, and it has to use its weakening yen to buy those strengthening dollars. It is just an incredibly tough spot to be in.
All this has made the infamous yen carry trade incredibly popular again. Here's the simple version of how it works. Japan's interest rates are basically zero, so traders can borrow yen almost for free. Then they sell that yen and buy currencies with higher interest rates, like the US dollar, and they just pocket the difference. This whole trade only works if the yen stays weak or gets even weaker, which creates this powerful self-feeding cycle of selling pressure. The key takeaway is that both the economic fundamentals and the speculative trading are all pointing in the same direction, down for the yen.
And all of this leads to one of the most fascinating paradoxes we're seeing in the markets right now. It's really a tale of deep fear in one corner and just extreme greed in another.
So, over here on one side, we've got pure, intense fear. The currency and commodity markets are flashing all sorts of warning signs. A yen on the brink of crisis, threats of intervention, and the risk of a widening conflict in the Middle East. But then you look over at the other side, and it's a completely different world. The equity markets, especially in the US, are being driven by extreme greed. And it's all fueled by this unbelievably powerful story around AI and semiconductors.
And this isn't just a feeling, the performance backs it up. Intel just posted blowout earnings talking about huge demand for its data center CPUs, and the stock just soared. The Philly Semiconductor Index, a major benchmark for the whole chip sector, has been on a record-setting 17-day streak without a single down day. It's incredible. And despite all this global turmoil, the S&P 500 is just casually trading near its all-time highs.
This massive disconnect is captured perfectly by CNN's Fear and Greed Index. While currency traders are biting their nails, stock market sentiment is planted firmly in greed territory. It really seems like this powerful AI narrative is just completely drowning out all the geopolitical risk for stock investors.
So, the big question is, what happens next? Well, all eyes are now turning to the central banks and the economic data that's about to drop.
Taking a look at the economic calendar from investing.com, the week ahead is absolutely pivotal.
The main event, the headliner, is going to be the Bank of Japan's interest rate decision. Any little hint of a more hawkish policy could send the yen rallying hard. But if they fail to act, that could be the trigger that sends us flying past 160. We'll also be watching key U.S. data like consumer sentiment and inflation expectations, because that's going to influence what the Fed does next.
And that really leaves us with the ultimate question, doesn't it? The market is completely caught between a central bank that's really hesitant to tighten policy and this immense, overwhelming pressure from global events. Will the Bank of Japan finally be forced to act decisively? Or is a much, much weaker yen simply the new reality we have to get used to? It's a critical moment, and everyone is watching Tokyo. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.